Hi guys, welcome to my morning brief. How you guys doing? I hope that you had a very good weekend. Today I'm going to be talking about GameStop, BlackBerry, Robinhood. Have you been seeing those names in the news lately and trying to figure out what the heck these guys are all talking about? Well, I'm going to try and explain it today, and I hope that you will understand. Right, because I think it's important that you do. I think it's the next big thing, kind of like reminiscent of the Occupy Wall Street, several years ago, when Obama just took over. So I think that it's that kind of frenzy again that we're seeing. So let me just try and explain what exactly is going on. But to start, I'm going to just take you guys back to basic finance, right? Basic valuation. So imagine that I tell you to come and buy into my company. My company makes, let's say, 1 million naira per annum, and I tell you, if you want to buy it, my company is valued at 100 million naira, right? So what that means is you are essentially buying that company for 100 times its earnings. Because it earns 1 million and you're valuing it at 100 million. So rather than valuing it at 100 million, so that means that you're buying it at 100 times that amount. So that's a pretty expensive company to buy, isn't it? So most companies today, most of those big tech companies are valued like that. 100 times their earnings, 150 times their earnings. Tesla is even over 1,000 times their earnings. So why are they valued this way? They're valued this way because investors think these companies have huge growth potential. I might be making 1 million naira per annum today, but next year it might be 5 million, and then the year after it might be 15 million, and then I'll keep expanding and keep dominating, right? So, and that has been the model that companies like, Facebook, Amazon, Netflix, Google, that's basically been how investors have made money from these companies. They took positions in these companies even when it was pretty expensive, but they knew that these were tech companies that were going to dominate how, we live, right? And that's huge value. So makes sense, But then there are a lot of companies out there who can't ever justify that kind of valuation. Can they? Probably not. And that is why you have what you call short sellers. Yeah. So who are short sellers? So short sellers are basically those guys who say, you know what, you're buying that company for 100 million. Let's try and make it simple and make it 100 naira against 1 naira earnings, and they tell you that company is worth just 10 naira. It's not even worth anything close to 100 naira and can never justify that price. So what do? Short sellers will come to Mr. A and borrow those shares from Mr. A, the shares that is worth 100 naira today from Mr. A, and tell Mr. A that they will return the shares to them in 6 months, or let's just say 1 year. And then they will pay Mr. A a commission of say 1 naira every month. So that's 12 naira at the end of the year. What's Mr. A doing? He's not ready to sell the shares now. So he just lends you, and it's official because it's guided by regulations. And then Mr. B, who buys the shares from Mr. A, now starts to go out and starts to convince the entire market why that company's shares is really bad. So basically talks it down, wheels out a lot of analysis, basically defending his position that the company is bad. And then when the company's shares drops, eventually, let's say it goes down and drops to like 10 naira, or even drops to like 15 naira, what does he do? He goes back, buys back the shares at 15 naira, refunds it to Mr. A, and makes a spread of 15 naira. Isn't that lovely? That's what short sellers do, by the way. So they are basically there. They take the other side of the position in the market, and in a way, it's good as well because it kind of brings in some kind of stability and liquidity in the stock market. But over the years, short sellers have been the one making all the big bucks. They've been the one making all the money, and short sellers are basically big investment banks, investment companies, funds. They've been the one making the money in short selling, that is. And retail investors, who probably Mr. A belonged to, were the ones losing. And so there's just been a revolt and complaints over the years, and then so a couple of guys on Reddit decided, you know what, let's just deal with these short sellers and all these big investment companies. How are we going to do that? They said, okay, you know what, let's all buy into that company that they have basically taken a short position on. So back to that our company, 100 naira, right? And then they say, let's keep buying it. So you remember the short seller borrowed it, hoping that it would drop, and the short seller is paying interest, right, or commission. And then the retail investors come together, bring in all their savings, and they keep buying the shares of that company. It goes from 100 to 150 to 200 to 250 to 300. Now you see that the short seller's position as his loss has widened because he borrowed it at $100. So now that stock is now worth 400, and the guys buying it don't care. They might lose money, but you know what? This is ideological for them because they just want to deal with short sellers. And they want to deal with the market, people who they feel haven't been fair to them. They call themselves Main Street, so they're trying to deal with Wall Street. So that's why companies like GameStop, BlackBerry, all of a sudden their share prices are rising, because these are companies that short sellers have taken position against, because they believe that the value of those companies will plummet, seeing that maybe they're not doing too well. So that's what's happening. So that's why you see GameStop and BlackBerry. Now, Robinhood is essentially a trading platform, and that's where retail investors go to buy shares. It's like a stockbroking app on your phone. We have a lot of Nigerian stockbroking apps on our phones that you can use. So Robinhood is the one, it's a very popular one in the US. And they've basically made retail investing very, very easy for a lot of people. And so when all these things were happening, you know, perhaps maybe due to the downside risk in going into this ideological battle, Robinhood decided to limit the amount of trades that investors could get, and that really riled up retail investors. They were very, very upset, you know, and then a lot of them started throwing invectives against you know, Robinhood. But I mean, that's what it is. Government is trying to step in, as the US government, trying to tell them to everybody to just chill, because people are going to lose money eventually. Because I mean, GameStop and a lot of those stocks probably ain't worth that kind of amount. But then this is ideological, and when it's ideological, people really don't care. Imagine 1 million people bringing $500, and they don't care. They are ready to burn it, just waste it, just to prove a point. So I hope I've been able to explain this as succinctly as I can. If you got more questions, you know, you can drop a comment, ask me, and I'll try and explain. We'll try to do this a bit more often. I'm sorry I haven't been around for a while. It's just too much work. But I'll try and do this a bit more often, and explain things as much as I can. So do enjoy the rest of your day. Bye.